All right, Mitch, we're
There we go.
we're live and ready to
Okay,
go.
we're
So
back.
I timed that well as you're distracted doing other things. Figured I'd catch you, you know,
In
fumbling
action.
over something. Right? Maybe a swear word would get dropped.
Not this, no, not this go around. That was a organizing thing.
Yeah. So Mitch, is we're talking about what our conversation should consist of today. We've had this question come up on multiple occasions recently with potential buyers in conversations around, hey, I'm looking at buying a new build. What happens if the interest rates go up? Or I want to be out looking. I don't have a home picked out yet. I'm not under contract. So, how do I keep from the interest rates climbing at such a pace that it's going to push me out of the market?
Right.
Right? Because the interest rates climbing and that's going to affect my payment. So, you and I wanted to discuss specific programs or systems that your company has around this very issue that we're running into. So, as we get into that, Mitch, go ahead and tell us a little bit about kind of your background and your company real quick.
Sure. Appreciate it. Again, always good to see you in our monthly get-togethers and talk about the market. It's always fun and kind of gives us time to do a little research if needed to get a good grip on the real life situations as opposed to textbook or news clips that people see all the time. Because usually news clips are 2 to 3 days or more delayed, and things have shifted already after that has been communicated to people. So I think it's a great time to get together and give people current and updated information,
Yeah.
which is very crucial in a very dynamic market that we're living in right now for real estate. So I am Mitch Friedman, been a mortgage banker, loan officer for the last 34 years. I work with Pivot Lending Group, who's based out of Littleton, Colorado, and they have been doing home loans for the last 20 years here in Colorado and are very well positioned to handle current market conditions, which is very busy, very active, and need to respond very quickly. Because as a mortgage banker, we do everything in-house. We're not a broker where we're sending the information or the loan file to a different company to be reviewed. So we're nimble, we're quick, we're available Monday through Sunday, 8 a.m. to 8 p.m. and sometimes later or sometimes earlier, because the real estate market lives even when we're sleeping. So we have to respond as needed. And I just love what I do, even though I've been doing it a long time. As I was mentioning, the market changes all the time. So my days are different every day. It's never the same day. And it's just fun to see people buy a first home, buy a new rental property or another rental property, or have people co-sign with their either parents or their children to buy a home. So there's so many different things that take place in our industry that are very soul-filling and gratifying. That is our other reward from an emotional standpoint for doing what we do. And that's why I keep doing it. So again, thanks for having me on again this month. I look forward to our our conversation because it's a good one.
Yeah, and it's such a cool industry that you and I get to be part of as we, help people with large financial transactions, getting into home ownership, and that's for most people that's included in their American dream, right? It's owning their real estate, owning their home.
Right. Yeah, and it's a piece of growing a net worth and a position for retirement, depending on when you start buying property. So there's so many things that real estate can provide and offer and position people in a way that you can't do that really in any other type of investment vehicle, unless you just have a ton of cash. Otherwise, leverage is where you actually get the huge benefit. And that's by buying real estate and financing it. Even if you have cash, financing is oftentimes a better way to purchase the property.
Yeah.
So,
yeah, because even at 6%, Mitch, that's still pretty cheap to borrow money.
it is. That is correct. Exactly. Especially with appreciation far outpacing that interest rate cost.
Yeah.
So definitely.
So let's jump into that topic, right? Around, I'm a new buyer right?
Mhm.
Or I may have bought before in the past, right? But here's my concern, Mitch, is that you and I, as I'm getting my pre-approval over to you, and I find out that hey, I'm approved at 5.5% or 5% or 6% or whatever it is today, and it might take me several weeks or a couple of months to find that ideal home. So what happens if in 2 months interest rates have gone up a half a point or more? What normally would happen in that situation for me as a potential buyer?
Sure. So we'll talk about just kind of general ways of doing business in that respect, and then we'll talk about the program that my company offers to help offset that risk factor of rates moving up while you're looking to purchase a home. And that option we're going to talk about, Matt, is going to be for a resale purchase. And then we'll talk about if someone's buying a brand new home, and we have a long-term lock option as well. So, given your example, you as the buyer would unfortunately be at the mercy of the market until such time you go under contract, and whatever the interest rates are at that time, regardless of what they were when we started, would be the interest rate you would get to choose from, and that would set your mortgage rate for the next 30 years if it was took a 30-year fixed rate loan and you kept the home for that long. So there really was not a way around that type of scenario to help offset the risk of rates moving up like we're currently seeing in the environment right now. So our company came out with a program to help offset that. And it's called a 90-day shop and lock program, where we can lock somebody in for 90 days today while they're looking for a property. And then the criteria is they must close within those 90 days because it's a 90-day locked-in rate period. Regardless of rates going up, you're still locked in, or they're still locked in at that rate that they locked in at when they initially took that program. And then the really nice feature of that program is once they go under contract, and if they're going to be closing within 60 days based on the contract closing date, then if the rates are lower at that time, they get to use a float down option to actually reduce the rate to the current market rates. So it's a protection on the upside of rates going up, and it gives them the benefit of rates should drop, that they get to take advantage of the lower rates. And it's a really, really nice program to consider using, because there's really no loss involved in that, because you're guaranteeing a rate, worst case scenario. We do have a $500 upfront refundable fee. So as long as we close within those 90 days, that upfront $500 will be refunded at the time of closing. So it's a phenomenal program. We've been using it more and more now recently, only because for some people it took longer than 90 days to be under contract and then close within those same 90 days. But we think the market's in a place where we'll be able to do that a little bit more quickly, and there's possibly more available property to choose from. So with a little bit larger inventory pool, the speed at which someone could go under contract, I think, is going to increase now, hopefully over the next couple of months. And this program will be wonderfully positioned to take advantage of it.
Yeah, so traditionally, if it goes up a half a point in interest, let's say I'm in today at 5.5, but in 30 days interest rates have gone up to 6. That $500,000 house now is the same as me paying $525,000 for the house. That's a huge jump when we look at just the cost of ownership. So being able to shop with confidence and knowing, okay, this interest rate isn't going to change. I'm going to be able to get into the house that I want as long as I close within 90 days. You know, we got to be serious and looking at homes and not necessarily dragging our feet, but it gives you about roughly 2 months worth of time to shop, right, Mitch? Because if we've
Correct.
got 30 days to contract to close,
Mm-hmm.
I got about 2 months. It's 8 weekends out looking at real estate that I get to pick from.
Right. And oftentimes that's plenty of time, even in the market that we've been having. But still, I think there's a little less competition currently. Still very active, still a market where valuations are still holding tight. But I'm seeing, instead of 12 or 13 offers, I'm seeing 2 or 3 offers. But an offer is an offer, and as a seller, that's all you need is the one that makes sense for you.
Yeah.
So it is nice to see a little bit of a shift in the marketplace to be able to take advantage of something like this program that we're offering. And yes, a 0.25% in the rate is a huge increase in somebody's monthly payment and the overall expense of owning that property, for sure.
That has a
Yeah.
huge impact. And,
Yes.
buyers that we work with, they'll typically, we look at on average about 6 to 8 homes, which is on average about 1 to 2 times out looking at property before we find the right one. So having 8, gives us some time for sure. So being able to shop with confidence to say, hey, I know that we'll be able to pull the trigger. On a personal note, this is something that I'm looking at because I've not this specifically, but I my vehicle, my Volkswagen is dying, and I couldn't find what I really wanted. So I put a vehicle in on order, and they're saying, hey, it's going to be about 2 to 4 months, or excuse me, 4 to 6 months for it to come through. And well, gosh, if the interest rates continue to climb, the budget that I had set aside for that truck might change, and that's going to impact it. I wish the credit union had this kind of long-term lock. It says, hey, Matt, even if interest rates go up, right, where you're locked in here, and we'll even give you a one-time float down. So
Right.
the float down, and I want to go back to that as you talked about that, Mitch, because I hear that and I'm looking at it. This is a way you can have your cake and eat it too. So I'm locked in at whatever my interest rate is. If interest rates go up, it doesn't matter. I'm still locked in. It doesn't impact me. Affects everybody else, but not me.
Right.
And if they go down, I actually get to drop down one time to the lower interest rates.
Correct. It is a win-win-win. First 2 wins is for the client on the upside of the rate going up. On the downside, if rates go down, they could take advantage of it. And then a win for us, you and I, that we get to help represent them and find them a home and provide financing for them. And it's an amazing tool. And again, back to peace of mind when you're out looking, so that you can actually properly budget as the buyer to what your payment will look like, because you're guaranteed an interest rate from day one when you exercise that program. So great option to consider.
Yeah. So now the other piece to that, let's say it's not the resale, new construction can be a great option for a lot of folks, right?
Mm-hmm.
The way that home values have been going, you're contracted today's price, and then when you close 9 months later, the market is dramatically increased. You may be walking into 2%, 3%, 5% equity with values going up. We're not seeing that as an uncommon occurrence.
Right.
The downside to that for most folks, if they're under contract, is, well, what happens again if the interest rates go up? Because if I'm worried about them going up in the short term, in the next 90 days,
Mm-hmm.
what about the next 9 months? The likelihood that they're going to go up.
Right.
What are we seeing there, Mitch? And I don't know if you've got these numbers handy, but I'm just curious. If we were to look back 9 months ago,
Mm-hmm.
ballpark, where were interest rates?
3.75.
Okay. And now we're 5.5.
Correct. And I know that only because I have people locked in from my current clients on these long-term lock programs for new builds, and we're having the conversation around rates right now.
Yeah.
So the program is, again, another amazing option and opportunity to get some peace of mind around financing when you're buying a new home that isn't going to be built for, well, I don't know any builders building less than a year right now. So they're somewhere between 10 months and 15 months if I were to get on the low end and the high end. So our program that we use, it's up to a 1-year lock program. There's 4 different time frames that people can use it for. So 12 months being the longest, then 9 months, then 6 months, and then 4 months. And those dates are all prior to the actual close date. So if someone were to contract today and the builder said, we know we can close your property within the next 10 to 12 months, and we would exercise a 12-month lock option to build in that extra couple months in case there's any delays. And that interest rate would be guaranteed today, once they're under contract, to be not to move for the next 12 months. And then it has that same float down option. So if the rate is lower when we're within 60 days of the house being completed, and the interest rate is lower than the rate they locked in at, then they get to exercise that option one time to be able to reduce the rate to the current market rate at that time. So, for example, on this long-term lock program today, I could tell you where the rates were. They're running right around 5.875, maybe 6%, depending on the qualifying of the borrower. But for round numbers, let's just say 6% guaranteed for 12 months. Today, now we're within 2 months of closing, and the rate is 5.375. We would cancel the 6% rate and relock it at 5.375. There's no cost to the borrower for that float down option. There is like the other program we have, there's a refundable deposit, and it's 1% of the loan amount. So if someone's borrowing $500,000, they'll deposit $5,000 on the day they want to exercise locking in that rate for a year. And then on the day of closing, they receive that $5,000 back as a credit towards their down payment at that point. It has proven to be a great loan. Everybody's very excited to have some protection on the upside, thinking that with the Feds raising rates continuously throughout this year, that this will give them some protection. At least they know their worst case scenario.
Yeah, so excuse me. As we're under contract, not being terrified that, hey, we're going to get towards the closing table, we're going to get towards that date, and I'm not going to be able to afford it. Right. To be able to confidently go in and say, hey, we know it's going to be here. If it drops down, great, I can do that, but I'm not going to be priced out of my home.
Correct. And it's really important for the buyer. It's important for the builder as well. They want to make sure that the buyer can qualify 12 months from now, not just today, especially if we're in a lower interest rate environment. And that's important for everybody involved. And this also protects the builder, which is why they like when the lender offers this program as well.
Yeah, again, protection against the unknowns for so many different avenues, right? Right. We look at the sellers as well on the resale side of it. Mm-hmm. If I'm a seller, it's something that I have to be cognizant of, right? Okay, we're going to go under contract, and then is the buyer going to lock on time? What is that going to look like? Right. Same with the builders being able to make sure, hey, when we get to the closing table, we're going to get this done.
Yeah, and I'm finding you bring up a good point with resale transaction. I'm finding more and more listing agents. So I work with an agent representing the buyer. The seller works with an agent that represents the sale. And when I communicate with that realtor who's representing the seller, they're asking me, is the buyer going to be locking in right away? Because we want to make sure that they still qualify to be able to close on the home. And with the new contracts that has this loan availability deadline in the contract, which is basically one of the items that a buyer is using to make sure that the loan that they qualified for and got approved for is still a comfortable loan program for them. And if they did not lock in and rates went from 5 to 6 or 6.5, and they're like, I can't afford that payment anymore, that is what the contract's for, is to help them not have to close. The goal would be to make sure you can help offset that also by using a lock program in some fashion, so that everybody's comfortable going in, and that's important for everybody.
So, in to that point, Mitch, as you talk to the listing agent, and I think we've covered this in the past, your skill, your reputation, your programs are absolutely helping buyers win offers in a multiple offer situation. So, for those that are watching, let's put yourself in a seller's position for a moment. Let's say that there's two contracts and they're relatively the same. They're pretty close, but you like the lending on option B, and the option A is maybe okay. Well, gosh, you're going to lean towards that option B because you like the lending better. Now, even if it's not the same dollar amount, it might be a little less, but you believe to a greater detail that it's going to close. And that's going to make a big difference and tip the scale to your favor as a buyer.
Right. And that's part of our service to our clients, is we make that phone call, or I'll speak for myself because you do your side of the equation in conversation with the listing agent and talk about contractual information and the strength of your buyers and their commitment to wanting to buy the home. And I speak to that same realtor about the strength of their ability to qualify, and our ability as the lender to perform and get the closing to close on time, and with as little hiccups as possible. And if there are any along the way, we communicate about it. But oftentimes I'll know that agent as well, because I've been doing loans for a long time in Colorado, who knows the reputation that I have and our company has, to say, if you're on the job, Mitch, and you're the lender on this, I know everything will be just fine and we'll close, or you'll communicate with me if something should come up that we all need to converse about. And that sometimes does tip the favor into our buyer's contract, because they feel more comfortable with the lending side, to your point, as long as things make sense for the seller. And that dialogue with the listing agent from you and I is crucial to build a nice working team for the next 30 days, because we may not know each other. You and I know each other, but we may not know each other with the other agent. But we're gonna kind of live together in our business day for the next 30 days, and we all want to come from the same place, and that's doing right by our clients. And when we have that communication, it does lead them to talking to their sellers in a fashion that says, I've communicated with these people, and I know this is going to be a transaction that will work out well, as long as nothing comes up that nobody expects. So that is a big benefit that you and I provide to our buyer clients when they're putting in offers and representing them. So it's a good, very valid point. Financing is crucial in accepting of offers.
Yeah, without a doubt. Now, as we look at this program, really designed for two different segments to solve the same problem, that resale, I can lock in today's rate and I have 90 days to continue to shop. Now, right, Mitch, most lenders, without this program, most lenders aren't able to lock without a property in place, meaning you have to be under contract.
That's correct.
Right?
Correct.
So it's not like, hey, everybody else could do it 60 days. Mitch is just cool and he gave us an extra 30 days. Most lenders are unable to lock unless they've got a property address. You have to be under contract. So be able to lock and know that you're not going to be priced out of the market that you're looking at builds a whole lot of confidence.
Yes, for sure. Yeah. And that's what we want. We're taking away the unknown of something that is very unknown, and that's movement of interest rates. And then the buyer can focus on finding the right house for them. Because there's a lot of work just to find a home. And then if you add the other potential stress of interest rates moving up while you're looking, that takes that piece away. And it's such an important part of the transaction, and peace of mind. They don't feel pressured to buy a house that they see that they like, but maybe not like enough. But rates are going up. I need to write an offer now because I don't want to be hit with higher rates. It gives them so much more flexibility in their decision making. And it's a big purchase.
I love that as a potential buyer for something is what are my options, right? I want to have a multitude of options so that I can evaluate and decide, okay, what's the best avenue for me personally? Okay, I can do that, but if I do this, it comes out a little better. Let's do this.
Right. Yeah. And these programs are available just because we can qualify them for a traditional FHA loan, a VA loan, a traditional conventional loan, so Fannie Mae loan as people know it. There are other programs that, like a down payment assistance program, they have their own version of lock-in programs, but they won't let us lock in a rate until you're actually under contract. Yeah. And then they have 60 days for locking in the rate. So these are going to be 98% of the transactions that you and I are involved with and our buyers are involved with fall under this category. So it's used quite a bit.
Well, what's the common conversation, when I'm talking to buyers, potential buyers, is not, hey, what are interest rates today? Because, Mitch, I don't know how you keep track of it. You're in it all the time. You're in the mortgage side of it, so I get it, right? It's changing so frequently. I don't have the bandwidth to keep up with what interest rates are doing. Yet the conversation is more, the reason you want to talk to multiple lenders is not necessarily because of rates. Like you're going to get a much better rate from somebody else. Because for the most part, they're all mortgage-backed securities. They're all selling them. They got to fit into this box, so to speak. But it is around programs like this. What are the other fees that are associated with it and the skill of the loan officer? So, programs like this can absolutely make a huge difference in somebody's home buying experience.
For sure. And the networking that you and I do, I know could come into play when an offer is being written, like we just talked about earlier. So they hire me and you not only for helping them, but we also have a reputation that does help them get an offer accepted without them even knowing that's why it got accepted until we talk about it. So, and those are always really fun opportunities when those take place, when it's, we took this offer because we know Matt Harper, or we took this offer because we know Mitch, and we know that these guys perform. And that's great. That's why we work hard for our clients and keep those reputations up.
There's so many things that happen behind the scenes that we don't always share with our clientele, and that's okay, right? At the end of the day, we want it to be a great transaction for them, and it's about them and them winning and accomplishing their goals, which is fun. So
right, yeah, and that's what makes real estate a great avenue for many different things that we spoke about earlier, and hopefully people will see it that way when they're entering into the fun zone of buying a home, and then at some point possibly selling a home and buying another home, or keeping it as a rental and buying another property.
Yeah.
So
yeah, for sure. So for those that are watching, Mitch's contact information's there. If you've got questions about these two programs that he talked about, right, the lock and shop or the new build long-term lock, make sure you reach out. If you've got other questions about, VA benefits, VA loans, you've got questions about different programs for your unique situation, there's a multitude of programs available. So go ahead and connect with Mitch, find out what he's got available for you as you step in towards your home buying process.
Great. Well, I appreciate that, Matt, and I'm available to answer any and all questions. Pretty good at knowing all the answers to most of the questions, and if not, I'll call my underwriter and get an answer if I don't know it. So that's the beauty of being an in-house direct lender as well, to be able to take care of that. But it's good to see you again. Thanks for your time. Good to catch up.
Yeah.
And,
yeah. Thank you again, Mitch, for your time, right? It's always a fun conversation. I love these kind of programs that solve a problem that we really have in our industry right now.
Right. Yep. It's definitely one to consider for sure.
Yeah.
So thanks again. And I'm sure I'll talk to you tomorrow, but I will see you next month in our next meeting.
All right, everybody. Thanks again for tuning in, Mitch. Thank you for joining us.
You got it. Thanks, Matt.
All right.
Bye-bye.